Yeah, I feel like the more, Josh, people say, how much higher can this market go up? How much frothier can it get? How crazy is this market? The more it goes higher.
Yeah, and the bears would say that one thing stock market investors do very well is double count. So they start buying up a stock because they think good news is coming. Then good news comes and they buy more of it. And that's a phenomenon that we've seen playing out really all summer long, continuing into these earnings reports. So when you see a company like Zoom, for example, which absolutely smashes expectations, it's not like the stock was sitting flat in advance of that happening. So in the case of Zoom, I think you got triple counted. But I think what's interesting today, Sarah, 76% of the S&P 500 stocks are now back above their 50-day moving average, which admittedly is noisy. It's a shorter-term moving average, but still, you've got more than three-quarters of the S&P doing very well right now, at least in the short term. That number's only 55% for the NASDAQ 100. And what makes that astounding is the NASDAQ 100, the Qs, are up 47% in the last 6 months. So what that tells me is that there is some profit taking going on in the big cap tech and consumer discretionary and biotech names that make up that triple Q index. So while you have a day like today, DocuSign is down, Apple's down. You guys cited a few other names. Now you have utilities up 3%. Tesla. You have staples up 1.5%. New highs today for the consumer discretionary. So you have other stocks coming up here and starting to bang their heads up against the ceiling and look for those new highs. And I think it's very encouraging.
A 3.5% move higher for utilities is unusual. Let's hit Zoom. You just mentioned it.
Leading the market today.
Yeah, utilities leading the market. Real estate right behind. Another one that has underperformed. So, Josh, you mentioned Zoom smashing earnings expectations when it reported Monday. Investors are trying to pick the next stay-at-home winner. Peloton is surging again today after J.P. Morgan raised its price target on the stock to a street high of 105, an 8% move right now. CrowdStrike is getting a boost today ahead of its own earnings report after the bell. But some going-out stocks are winners, too. AMC, the movie theater chain, surging after announcing plans to reopen 140 theaters by Saturday. Josh, stay-at-home winners, especially some of those cloud names, which seem to go up every day, or reopening trades like movie theaters and airlines and hotels? Which is it? Or maybe both?
Well, I think it could be both. I think we should stop. We're like 6 months into this. I think we should stop with the teams. I think we look. Starbucks, which I'm long, has had a really big move over the last couple of weeks. They were not a work from home stock. They got killed because people weren't commuting for business anymore. People weren't traveling. But that's working now too. So I think there's room for both. But this is the thing I want to say to you, and I want everyone to listen to me. Everyone needs to get this term work from home stocks out of their vocabulary, because that doesn't accurately describe why these stocks are working and will continue to work way past the point where we have a vaccine and people aren't afraid to go out anymore. We have to stop saying that. It's work from anywhere. No more WFH. It's WFA. I need everyone to understand this. The stocks that are working all year because they're, quote, work from home, no, it's about the cloud. These stocks were already working before the pandemic. All the pandemic did was accelerate things. And when the pandemic is over, these companies will continue to do well, because the trend is not everyone's going to stay home forever. It's not everyone has to report to the same place in order to do business. So when you think about DocuSign, you should not be saying this is a work from home stock. It's a work from anywhere stock, and it's going to be with us for years in the future, long after we're all trapped in our houses. And I can give you 50 stocks that need to be thought of that way.